Hello guys, and welcome. Oh, I'm moving the wrong way. I was trying to straighten myself up. That's counterintuitive. This camera is different to the one next door. Okay, so my name is Martin Jones, and this is the London School of Business and Finance. As you can see, emblazoned over my shoulder, and this is LSBF TV. But what are we doing here? Well, if I just straighten my shoulders a little bit, you'll see reference to the brand that we are checking out today. It is AAT. I love AAT, as it says emblazoned on my t-shirt. And during this session we're going to address level 4, and I'm going to have to look down to remind myself the name of this paper, especially the acronym. It's FSLC, the Financial Statements of Limited Companies. And kind of drawing my eyes down there tells you that maybe I should go mini-me and show you what I'm reading. So there you go. There is our exercise, which is taken from the 2016 examination. And perhaps you can see immediately that, no, I'm sure you can't see that immediately. Let me bring this thing over here. I was going to say, perhaps you can see immediately that it's a chatty job. Maybe that only becomes obvious once I start scrolling through. So it's financial reporting as in talking about stuff. So back up to the top, let's just check that everything's looking cool. So it's 4 o'clock, it says 4 o'clock there. I'm Martin Jones. We have this stuff to do, let's do it. So this is an extract from the 2016 examination, which the AAT have provided on your website, on my AAT, as a specimen paper. The specimen paper actually is a CBE, a computer-based examination. But as you can see, one of our administrators very kindly has typed this thing out so I can communicate it to you using the pen. I can actually write on this thing. I'm not sure it's quite so necessary, to be honest with you, with this particular exercise, but very, very useful to be able to put arrows when I'm doing the double entry and number bashing that I've been doing the rest of the afternoon. What shall I say? What shall I say? I have a thumbs up from David Jonathan. Welcome, David. Nice to see you. And welcome everyone else watching this as a recorded exercise. I hope you enjoy it. So should we be good boys and girls and look at the requirement first to focus our mind? There's some narrative there, talking about some action, and we need to explain how each of the items above should be treated in Fit and Flexi FS for the year ended this year. Use the figures above to illustrate your answer where possible. There's not much figures, to be honest with you. You don't need much figure work. That's a standard reference there, and sometimes figures are very useful, but not so much here. Matter 1 is 6 marks and matter 2 is 6 marks. So this is just an answer space, and I have come adrift by trying to use the keyboard during I think was it last week's session. So I'm not going to type the answer because I think that would be unwise. It didn't work for me last week. There's no reason to think it will work for me this week. So I'm gonna use the pen to communicate. And what I'm going to communicate is 6 points regarding paragraph number 1 and 6 points regarding paragraph number 2. The 6 points that I go for need not necessarily be the same as the 6 points that you go for, but somewhere in this vicinity. Somewhere in the vicinity of what you'll see me write is what you are looking for. You don't need to write very much, but it does say, where does it say again? Explain, which does imply the use of sentences. Each sentence can quite happily be 10 words, but we are looking for subject, verb, object, SVO, as linguists call it, subject, verb, object. The boy kicked the ball, that kind of thing, it needs to be full sentences. What do I need to say? I don't think I need to say any more, and I'm going to run out of time unless I get on with this, so let's get on with it. Fit and Flexi operates a chain of gyms The company's finance director is working on the financial statements for the year end of this year and has brought the following matter to your attention. So I'm like some advanced bookkeeper dude, and I'm going to help him out. I'm an accountant and advisory. On the 18th, I'll just check out the date. Very important dates in these stories. So the year end, 31st December 2001, 18th September 2001. So quite a long way before the year end. A long way before the year end, a claim was made against Fit and Flexi by a customer in respect of a chest injury he had suffered while lifting weights in one of the company's gyms. The customer argues that he received inadequate instructions in the use of weights from the gym's personal trainer. Fit and Flexi's legal advisors have confirmed it's highly likely the customer will win the case. Based upon their experience of similar cases of nature, they've estimated that the damages of approximately $20,000 will have to be paid. I really don't know how much of this kind of language you're familiar with, but an estimated creditor has a particular name. It's called a provision. The detail of language matters less and less as you get more advanced in financial reporting, to be honest with you. But here down in AAT, even though it's level 4 AAT, it is quite important to use the appropriate phrase. So when a supplier sends you an invoice, you know what you owe, that's a payable. But when a dude sues you and you don't know what the damages will be, then that is a provision. And you only provide for a provision if you fulfill the provision criteria. So what we're going to do is whack out the criteria, show that they're fulfilled, and conclude. That'll be our job. And we're going to do that in this space here. So there's different ways of describing this mnemonic, but just at the moment I'm quite fond of spot the roo, g'day. So I've got a kind of Australian version of the standard. Here we go, so provisions. Oh, okay, I need to adjust the pen. It's been set to, what's that thing called? Pressure sensitive, there you go. And I don't press very hard, so it doesn't come out unless I have regular pen. So provisions. There are 3 criteria. We spot the roo, g'day. So you need a reasonably reliable estimate. As in a reasonable guess. You need an obligation. As in a legal or constructive duty. Oh, sorry. And we need an outflow, as in a probable outgoing. And if all 3 criteria are fulfilled, then we will provide for the potential outflow. Estimate. Estimate. There is an estimate of 20,000. Oops, sorry. So we clearly fulfilled that criteria. Obligation. There is a legal duty of care. or so the lawyers tell us anyway. On outflow, it's likely 20,000 will flow out. I do find it hard writing without lines, actually. So each of these things that I have communicated so far is what's called a point. I might get more than just 1 mark for the first point for the criteria, but I'll certainly be up at 4 at least. And therefore the conclusion is provide and I'm probably up at 6 marks already. But if there's any doubt, I'll put the journal and that will give 2 more points. So of course the provision is a former creditor, so I'll credit the creditor. On the balance sheet with 20,000, and the corresponding expense goes into the P&L, probably in operating expenses. How am I doing for time? Yeah, about halfway through the time, so I won't be hanging about looking at the daisies. I'll say there we go, 1, 2 added to the previous marks gives me 6. That's probably more than 6. It's more than the minimum, but certainly would guarantee you 6, which is what we're looking for, because there's 6 marks as you can see at the top, and there's 6 marks for the next one as well, which I haven't read. So back up to the top. There we go. On the 1st of November 2001, which is our year end, December, so it's 2 months before the year end, Fit and Flexi entered into a 6-month lease for some gym equipment. Under the terms of the lease, Fit and Flexi had to make payment of this and a further payment of that. The equipment has a useful life of that and would have cost 20,000 if it had been purchased outright. This is a tricky subject, my apologies. This is a tricky subject. Sorry, just flashed to the back. What's that thing called? The, what is that thing? Desktop, that's it. Just flashed to the desktop briefly there for a second, which was an accident. Tricky subject, yeah, tricky subject. This tricky subject is called leases. And these are classified as follows. They're classified depending on where the risks and rewards lie. Ooh, sorry, risk and rewards. They can lie with the lessee, which is the user, or they can lie with the lessor, which is the legal owner. And to illustrate this point, I'll make you the user and me the owner. So the question you're asking is, who has substantiated all the risks and rewards, me or you? If it's you, it's one form of lease. If it's me, it's the other form of lease. And The lease accounting names are as follows. They're called, when the risk rewards are with the lessee, you do what's called finance lease accounting. And when the risks and rewards are with the legal owner, it's called operating lease accounting. And the most basic way of analysing the risks and rewards is to focus on the rewards. There is slightly more to the IFRS than this, but not much more. How shall I describe this? One simple way of applying the above is to look at the asset life and see if it's substantially transferred from the lessor to the lessee. So it's saying it another way is you look at the asset life and see how it's split out and see which one's got the bigger number of years. So if I can just use the figures that are in this question, I don't need to use illustration figures, I can use the figures in this question. In this question, we've got a 6-month lease, which is a half-year lease, and we have an entire asset life of 5 years. So what's happened is I've transferred half a year to you and kept the other 4.5. Which figure is bigger, a half or 4.5? Oh, 4.5 is bigger. Therefore, the risks and rewards remain with the lessor. What do we do when we have the risks and rewards remaining with the lessor? When the risks and rewards remain with the lessor, we do operating lease accounting. What does that mean? For me, I recognize an operating income, and for you, you recognize an operating expense. That's what that means. But let's not run ahead of ourselves. Let's do the analysis of the 5 years. 5 years. The lease divides the asset life as follows. So lessor 4.5 years and lessee half a year. So the conclusion is this is an operating lease. And hey, I may already be up at 6 marks. But I'm going to be hard on myself and say, nope, you're not over 6 marks for that. You've only made 4 points. I'm going to make you very, very hard. I'm going to be evil and give 1, 2, 3, 4. It may be 6 already. But I'm going to push myself and say, hang on, wait a second, see if we can actually explain operating lease accounting. So here comes the operating lease accounting. The lessor recognises the expense straight line, the same in each month. Did I say that right? The lessee recognises an equal expense in each month. And the lessor recognises an equal income in each month. So different ways of doing it, but the total rent is 1,500 plus 1,500 gives 3,000, and the total months is 6 months. We divide one by the other and we get a monthly expense of 500 per month. And then, surely you have 6 already. Well, I'm going to be hard on myself. Here is the journal to record this now. Just got to double check that we haven't paid a bean yet, but that's how I read it. Just going to double check that we haven't paid a bean. Let's go up there. On the 1st of November, Fit and Flexi entered a 6-month lease for some gym equipment. Under the terms of the lease, Fit and Flexi had to make a payment of this after the year end, so we've paid nothing so far. So we've incurred 2 months, the 2 months being November and December, so that's 500 and 500, of which we've paid none, so that gives us a creditor of 1,000. Here we go, here's the journal. I'm just going to see if I can tidy this up, because I might disappear off, behind my shoulder. Just give me a second, let's see if I can give myself an extra page here. I don't actually want that there, but I want that maybe like that. That looks nice. Here is the journal. So the rent expense is November and December is 1,000, and we credit the creditor. Fancy name for the creditor is called the lease liability, or indeed rent liability if you prefer. Fancy name is lease liability. There we go. 1,000. How many of a time? That's pretty good timing. And I need to be generous with myself now, because I have been a very good boy. That's at least another mark for the operating lease accounting and at least another mark for the journal. So this would have no problem of scoring a full 6 out of 6. Let me just show you that over my shoulder there. There we go. Ooh, like that. There we go. That's best. Okay, so 1, 2, 3, 4, 5. Indeed, there is 6. And the style of communication that I'm using here is called the point form of communication. That's a really good way of keeping track of your communication with the markers. If you can deliver a point per mark, then you are sure to be able to pass. Obviously, in the examination, you've got to keep an eye on your watch, make sure that you keep within the time that's important. And that's, of course, the reason why you are going to go to the specimen paper on your My AAT, and you're going to go to the website and actually try this paper and try and do it while you're typing. I can type faster than I can write, much faster actually, to be frank with you. But like I say, I did in this studio actually. I experimented with the keyboard while I was online last week, and it didn't seem to work terribly well in this studio environment. Basically, I was kicking out all sorts of things. The keyboard has got extra functionality besides being a keyboard. It is also a way of, changing between screens and things. So it didn't work very well, that, to be frank with you. Okay, so what do I need to say now? Reinforce my messages maybe. Back up to the top. Here we go. And then I'll go big me and say goodbye to you. So this is financial statements of limited companies, as you can see. And it's level 4 AAT, and financial statements. It's beyond the bookkeeping. And although a lot of this paper is related to literally the production of the financial statements, you know, the P&L, the balance sheet, the cash flow statement, especially the cash flow statements, we also get into some of the more advanced financial reporting, like, for example, provisions and lease accounting. Thank you very much for listening to me. I'm going to go big head now. So let's just straighten myself up on the camera. How do we do that? There we go. Again, thank you very much for listening to me. It's been a pleasure to talk to you this week on the subject of financial reporting. I'll be continuing next week. It's me again next week for my 4th and final session. This is in fact the 6th session. First 2 with Reg, and Reg will be coming back after next week. But next week is me again. So I wish you a very pleasant weekend and good luck with your studies. See you soon.